Good morning, everybody. This is a live market open for Thursday, March 10th. It's Draghi Day. I'm Yohay Elam, Forex Crunch, Market Movers Podcast, doing the show as usual for FX Rate. As usual, we'll talk about the recent developments in markets. Various charts and levels. We did have quite a few movements. The next 24 hours and one big event coming up in 5 hours, of course. And of course, your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxtweet-forex-live-video. Good morning, Carol, Sinatra, Dinda, everybody here. Okay, let's begin with, as usual, with market mood. So yesterday, the thing that shaped the mood, that improved the mood actually, after, if you remember, we had this weak Chinese trade balance figures, the weak export, the collapse in exports from the world's second largest economy. The mood was damp. Yesterday it improved. Oil began rising once again on better gasoline and distillates figures from the oil inventories figure, not the crude oil, which came out as expected, but the better distillates. Also, China didn't ruin the party. CPI came out significantly better than expected at 2.3. Let's take a look at this. Here we go. Inflation figures came out stronger than expected on the consumer price index. Okay. Now, some people say it's related to what's going on. I mean, the Chinese New Year, the new lunar year. Perhaps it's true, perhaps not. We have nice rises year over year, 2.3, and month over month, 1.6, both better than expected. Producer prices didn't ruin the party. They were already terrible at minus 4.9. Anyway, this also contributes to a good mood. Okay, and of course there's tension and repositioning ahead of Draghi. So before we'll talk about Draghi, let's talk about just the movements in euro dollar, which are repositioning. All in all, we had yesterday, when the mood improved, we had euro dollar rising alongside commodity currencies, and then gradually falling down. All in all, this is within the range. It's not that huge. This morning it's 30 pips down. It's repositioning ahead of Draghi. Some are expecting a big surprise, some not. Of course, we'll do a preview of that quite soon. Okay, so what else did we have yesterday? We had the industrial output from the UK missing on expectations, but manufacturing beat expectations. All in all, quite balanced. The pound remains attentive to mood. So on pound dollar, we have currently 149.90 under the 142.30 level. We've seen the pair fall below this level yesterday and remained there. It tried to make an attempt to rise. Perhaps the 142.40 would be more correct at this moment, but we didn't have any follow through. The figures were mixed, and the pound is waiting for. We'll talk about the RBNZ. Of course, that was the big surprise last night. So just going through the currencies one by one. The range of the pound is 141.25 to, or if you wish, a tighter range right here at 141.80 to 142.40. A limited range. It all depends on the mood. Okay, dollar yen. The mood improved, so we had a big bounce. We fell all the way to 112.20. I think we mentioned this line in the past because it also supported the pair beforehand. So dollar yen went back up to the previous range. Better market mood. Can really identify these moods, and then everything falls into place according to the feelings in the market. Anyway, currently at 113.50, some kind of resistance at 114. Stronger resistance at 114.50 if the mood remains positive. If not, 112.20 and 111, the double bottom right here. Okay, here we can see how this 111 line is a clear line of support. Continuing to the Canadian dollar, we had a rate decision yesterday in Canada, and the Bank of Canada was not that dovish. Okay, they of course they left the door open to rate cuts, but in general they are waiting for what's going on, what the Canadian government will introduce. All right, so we have a stimulus program probably coming up in Canada in later this month. in general, the Bank of Canada said that they're happy with the recent developments. Everything is as expected. I mean, they're not, of course, not too happy with oil prices, but that the economy is developing according to their outlook. No surprises, no need for changes. Everything's okay. Wait and see. This certainly helped the Canadian dollar. Began seeing this fall in dollar CAD. Okay, from we talked about 134.60 as resistance. We fell through 133.70. Half an hour after the rate decision in Canada, we had the oil inventories, and again they came out as expected with the rise of what was it, 4 million barrels, but more importantly, they showed that the level of distillates and gasoline, it fell. So we fell to support here at 132.70. Okay, since then we've moved a bit higher, but yeah, the Bank of Canada doesn't like to meddle too much, only when they see that it's needed. They didn't rock the boat, but that did have an impact because some expected them to maintain a more dovish sentiment. So the double 1-2 punch for dollar CAD, Bank of Canada not too dovish, and then gasoline distillates inventories came out better than expected. We had all this very nice move all the way. That was it's around 200 pips, peak to bottom. Anyway, we're currently at 132.68. Some support here at 132.60. It was the previous low the pair reached. Okay. All in all, the Canadian dollar CAD is behaving very nicely in ranges. Okay. 133 further resistance, followed by 133.70 and 134.60, the previous line of resistance. Aussie dollar, it did move a bit higher when the market mood was better. Went all the way to, where was it yesterday? Right here, 75.30. Okay, since then we're back to the previous range, back under 75, but still holding relatively high ground. So this improvement in the mood sent it to higher ground. All in all, the Australian dollar shows strength and shows stability. And now to the big surprise we had yesterday from a currency pair usually overlooked, the Kiwi dollar, the New Zealand dollar. There, the Reserve Bank of New Zealand surprised markets with a rate cut. Some economists blamed Graham Wheeler for losing his credibility by surprising markets. But anyway, they cut the rates from 2.5, 2.50 to 2.25, 25 basis point cut. And we had a big move in the Kiwi. If we look a bit, if we zoom out a bit, then we can see that, oh no, it's just falling from high range back to the previous range, but it's still quite a sharp move here. Okay, so we fell from 67.85 all the way to, in the immediate reaction, to 66.45. Okay, it's 140 pips. Quite a lot for the Kiwi. Remember, every pip here is worth more than, for example, on euro dollar or on pound dollar. So here we are, back to the previous range. 65 still works. Sorry, 65.50 still works as support. Anyway, it was a big surprise, and they're expected to cut rates once again in the second quarter. So the Bank of New Zealand, Reserve Bank of New Zealand, mitigates any kind of storms that might be brewing to the New Zealand economy. Okay, so that was a big surprise yesterday. It moved markets. The Bank of Canada didn't want to move markets, but it did do that anyway. Let's continue. Dollar Swiss currently under parity, and 104.40 works as resistance. Look how nicely it turns into a double top on dollar Swiss. I say nicely, but I must say also that it's prone to intervention. Support there at 99, followed by 98.50. Euro Swiss 109.40, still under 110, the round number that was partially defended by this S&B for some time, but we're anyway off the lows. I would say that the 109 handle means 109 to 110 is the current level. Euro pound very much stuck in range. Brexit fears weigh on the pound, but not too much because the market mood is improved. And euros awaiting Mario Draghi. All in all, remains at the bottom of the 77 level, 77 handle. well, 15 pips down this morning. Can't say it's a big move. Euro and pound are trading more in tandem against the US dollar. Okay, things will of course change once we hear from Draghi today, but at the moment we're stuck here. 76.60, 75.80, and 75.40 work as support. Resistance is 78.50 and 79.30. Okay, I'm sure that this cross will move. I just don't know in which direction. It all depends on Draghi. Same thing goes for Euro Yen. Euro Yen advanced because the yen weakened. Better market mood. Also, the euro weakened a bit, but anyway, 124.50 resistance, 125, 125.50. Further above, it's 127. That's in the case that Draghi disappoints. But if he delivers, of course, 123, 122.40 are lines to watch on euro yen. Pound yen finding some stability here above 160 at 161.30. Resistance at 162.30, followed by 163.80. On the downside, we have 158.50. Some stability here. We're off the lows. The pound is off the lows. The yen is off the highs. Dollar yen is off the lows as well. So we're far from this low of 154.66, but you never know what's going to happen next. And always talk about oil prices. So after we had this dip with the worst market mood, okay, we went back up yesterday. This, of course, supported the Canadian dollar. And we're back to battling the 38 level. 37.87 was the low back in August 2015. Worth noting, 36 and 35 work as support. The round level of 40, of course, is resistance. This is, of course, WTI crude oil. On Brent, we're above $40. Okay, so all in all, a better market mood. Supporting, well, Canadian dollar is the leading commodity currency. Aussie is somewhere in the middle, and the kiwi is behind just because of the blow from the RBNZ. Big surprise over there. Pound currently stable, yen currently stable, and the euro, of course, is in the limelight today. Let's talk more about levels before Draghi. 110.70 is resistance, followed by 112.50 and 113.75. The veteran line, also the high of the year, is a strong resistance in case Draghi does not deliver. If he does deliver, on the downside we have 109, well, 108.20, 107.70, and 107.10, which was the low of the year. For the lows from last year, here we have 105.30 and 104.60, the low level seen in 2015 and the lowest in over a decade. Okay, this jump here from 105.20 to nearly 110 is the big disappointment we had in December. Okay, since then we had fluctuations more related to the US dollar. Anyway, now it's Draghi's turn. Drum roll for Draghi. Okay, so what do we have on the cards today? Well, before we start Draghi and talking about Draghi, do you have any questions? Well, we can always answer questions through the events. Anyway, this is the timetable. At 1:45 GMT, we have the ECB rate decision. Okay, that's when we'll know if they change the rates from the negative deposit rate. High expectations that they will move. This will determine the first market move. Just the change in rates. They'll probably add to this release, to this statement, another something. They'll say that they'll announce more measures in the press conference. At this, the broadcast begins at 15 minutes before the event at 12:30 GMT. Okay, so with 1:45, we have the rate decision itself. We will only know about the crude rates, and that we'll learn more in the press conference. In the press conference at 1:30, we'll have all the figures, especially QE. Let's break things down one by one. And it could be a complicated decision. It's not only the crude numbers. Anyway, the negative deposit rate, the deposit rate is currently minus 30 basis points. minus 0.30. The minimum cut is expected to be 10 basis points to minus 40. Okay, that's sort of the bare minimum. Many expect 50, minus 50 basis points. That means a cut of 20 basis points, and some even expect 60 basis points. Okay, the caveat here, and we probably will not learn about this in the initial release at 1:45 GMT, is if this is a tiered system or not. Okay, if we will have not only a flat deposit rate as we have it now, one deposit rate for everybody minus 30 basis points, but if we'll have an even sort of a tiered system that on some deposits the rate will be one level, and then another level of deposits will have another interest rate, depending on the bank, depending on the size, depending on, complicated things. Okay, so if we have a flat cut of, let's say, 20 basis points, more than the minimum expected, a cut of 20 basis points to minus 50, but then at the press conference we learn that this only applies to certain conditions. This makes things a bit, could take out the sting, could make things a bit less strong, could hurt the euro less, could allow the euro to rebound. Okay, so this could be sort of quite confusing 45 minutes. Now the QE program currently stands at 60 billion a month. ECB buys 60 billion a month. The minimum is, well, some expected to remain unchanged because of a position from the Bundesbank and other members of the ECB. Most expected to be cut to be expanded to 70 or 75 billion euros per month. That means an additional 10 billion or 15 billion a month. Okay. This will be announced only at the press conference. Some even expected to be, 50% raise to 90 billion. Okay, 30 billion in addition. Remember that the ECB wants to put more money in circulation to help banks lend even more money, and also to lower the exchange rate. They will not say it out loud, but this is the only transmission mechanism that truly worked. Okay, because when we have a lower exchange rate, we have European exports becoming more attractive, and then imported goods become more expensive, so we have higher inflation. Okay, but what are they doing by QE? Printing more money, but this money has to go somewhere. So far, this money went to mostly government bonds, some asset-backed securities, things like that. But and regarding bonds, the limit has been bonds with yields of, the minimum yield was the negative deposit rate, minus 30 basis points. So if they lower the negative deposit rate, they open up a new market. For instance, some German bonds, especially shorter term, have yields under that are lower than a negative 30 basis points. Okay, so that investors are paying a lot of money to the German government just to hold the money. Okay, and by lowering the negative deposit rate, they can buy more bonds, and they can, of course, print more money on a monthly basis. What could be more interesting is that even if they leave the QE program unchanged, they could announce that they change the rules. They could change the rules by saying we have no yield limit. Okay, that means, well, we will still buy 60 billion a month, but we have no limit. Or if they do double, if they say we'll buy more bonds every month, 70 to 75 billion, let's say, or 80 billion, a lot, but we'll buy everything. Okay, even if the bond has a yield of minus 1%, minus 5%, we'll still buy it. Okay, this could, what economists this could make the yield curve steeper. Means that short-term yields are lower and long-term yields are higher, and in theory, this could also encourage short-term lending. Okay, yeah, the yield limit rule says that they will buy only. Once again, they will buy only if you have a German bond that now the yield is minus 30 basis points or minus 40 or minus 1%. Okay, it's not eligible for buying by the ECB because they set the rule saying that they will not buy bonds that are under this level. Okay, so if the negative deposit rate is here, they will not buy a bond that has a yield right here. But they can say, okay, we'll do three things. We'll first of all lower the negative deposit rate. So now, according to this old rule, more bonds are eligible. We'll print more money per month, so we can flash the cash. And you know what? We don't have a rule anymore. We can buy anything we want. That'll sort of open the floodgates. Okay, it means that even if the negative deposit rate now is minus 50 basis points, and we have a bond that its yield is minus 1%, the ECB will still buy it. Will still crowd out investors out of these bonds, and this money, in theory, should go to investing in the real economy. Okay, this money also flows out of the Eurozone, weakening the euro, which is also the best transmission mechanism, the only big success, well, huge success, especially given the situation. So that's, of course, something they will not say. Good morning, Jim. Good morning, everybody. Anyway, this is what we're expecting. Let's talk about the other events that we could have from the ECB. Okay, so they could announce some changes in the assets they buy. Currently, it's quite limited, asset-backed securities, which is a very limited market. The ECB wanted this market to expand. I mean, if the ECB begins buying more asset-backed securities, maybe the market will create more asset-backed securities because they will have high demand. But we're not seeing that yet. Perhaps they'll buy corporate bonds or other kinds of financial assets. We can have a change in that. I don't think it'll be quite significant. The tiered negative deposit rates, that's because when we have negative deposit rates, the commercial banks, various commercial banks, they just cannot make enough money. And we had, according to the Financial Times, some bankers complaining to the ECB out loud, well, at least on the pages of the Financial Times, that they will not be able to make profits. Poor people. So, because when you have negative rates, you'll have to try to lend out money, and you cannot pay out. People are not encouraged to deposit money. Anyway, it becomes complicated. That's why we'll perhaps have a tiered negative deposit rate system. Another thing to watch out, which is important, is the next moves. What Draghi will tell us about the next moves by the ECB, if this is the end for now, or if we'll reconsider in the next meeting or next two meetings. And every quarter, every second ECB meeting, like with the Fed, we have new forecasts. And this time in the March meeting, we'll have the first inflation forecast for 2018. Okay, that's far in the future. That's 2 years from now. But Draghi mentioned the importance of having the 2018 forecast before the rise. So let's see how they view inflation. If they view inflation as remaining weak, they'll have to, of course, adjust all their figures to the downside, at least for 2016, given the fall in oil prices, given the already lower than expected inflation rate of minus 0.2 for February, and core inflation only 0.7. We'll hear a lot about downside risks, materializing and things like that. Another another wild card from the ECB could be if they do whatever it takes. What we have in European banks is the non-performing loans. Okay, Italian banks have been under the spotlight for this, but also here in Spain, we know that values of homes have plunged, and we have many non-performing loans, and everybody knows the banks are in trouble, but officially they aren't, and they're sort of stuck in the middle. If the ECB does some kind of program to buy these to some kind of repackaging of these non-performing loans, NPLs. Okay, NPL is the term. And then perhaps it's another do whatever it takes. The problem with that is these non-performing loans are bad assets, okay? It's what they did in the United States with all these CDOs before the financial crisis. You take you take garbage, you take mortgages which will never be paid, repackage them, get them in a AAA rating, because and someone will always give you that, otherwise you take your business elsewhere. I've seen recently the movie The Big Short, and also an Inside Job. It's described very well, and this will sort of create the next bubble, the next problem. So I'm not sure the ECB will go there, but the ECB certainly has a lot of tools. Okay, I see a few questions here. If Draghi will disappoint the market, what do you expect from the yen? From the yen, I expect well, if it disappoints the markets, the yen will strengthen on a risk-off environment. The levels to watch in dollar yen are 112.20 and 111. Remember, it's a European event. It's indirectly related to the yen, but in general, if we have lots of good news from Draghi, I mean, lots of free money printing, negative deposit rate, a promise to do more, no limits on yields, even buying NPLs, which is sort of the new nuclear option, then of course it's positive for dollar yen, weakening the yen, because there's less need for safe haven assets. And on the other hand, if we have something disappointing like we had in December, for example, the yen could strengthen. Okay, comment here from Jack, sounds complicated. Yeah, it is complicated. I think initially the markets will move on the numbers, which are not complicated. A bigger deposit rate cut, a weaker euro, straightforward. More QE from 60 billion to 70, good. 80, better. 90, even better. Of course, more QE, more cuts, weaker euro, less QE, less cuts, stronger euro. But then these kind of details, where is the limit for negative yields? How will the negative deposit rate tier system work? If they buy these non-performing loans, which is a very extreme option, this could make things more complicated to understand. As always with big events, even less complicated ones like the non-farm payrolls, I suggest you all wait for the data, wait for understanding what's happening. There will be more opportunities later on. Okay, another comment here that means, from Dima, that means more demand for euro, dollar going to go up. I'm not sure what you're referring to, but in general, if the ECB does more, the euro will weaken. If the ECB does less, the euro will strengthen. Another comment here. These bigwigs need to smoke some pot, chill out, and overthink some of this crap. Yeah. Central banks, there is an ongoing conversation. Are central banks just doing too much? Perhaps, but perhaps it's needed because they need to fill the gap. Governments are not doing enough. Private sector is not doing enough for growth. Governments are not doing enough for growth, no fiscal stimulus, not enough reforms, especially in the Eurozone. The only game in town, as Draghi said it himself, the only stimulus program in the past 4 years in the Eurozone comes from his institution, from the European Central Bank, okay? So he always calls on governments to do more. Last time in his testimony in the European Parliament, he said what I mentioned, the only game in town, I mean, only stimulus program around. And he also said that governments with more fiscal space should do more. Cough, cough, Germany can spend more money. Comment here. Can you explain a little what is a currency war? Yeah, currency war is when each central bank, each government, each country tries to weaken its currency in order to make its exports more attractive, okay? When you have, here in Spain, really great wines, they cost, I don't know, 10 euros a bottle. and now these 10 euros are worth, let's say we fall all the way to parity, they're worth $10. It's more attractive than at the moment when they cost close to $11, right? So when a country tries to weaken its currency and making its exports more attractive, hey, look, we're cheap, buy from us, that's a currency war. At G20, the group of 20 nations made some statements about not doing any currency wars, not doing things on purpose, only for domestic needs. This was in referral to China and mostly to Japan. But of course, nobody says anything about Switzerland's interventions and their 3.5-year peg because, well, there's lots of money parked in Swiss banks. So, but in general, when we're talking about the currency war, we're talking about trying to weaken the currency in order to sell goods in a cheaper race to the bottom. Also here, this term, in order to export your way out of trouble. Okay. So that was a very long ECB. I'll do a recap, of course, at the wrap-up at the end of the show. I'll just mention that we have a few more things today, which are really not that important. US jobless claims at 1:30 GMT, like every Thursday. Let's see what's expected. Very small change from 278 to 275. Shouldn't have any impact. We're after the non-farm payrolls anyway. Have some figures here from Canada. Capacity utilization, new home price index. This could be interesting for the Canadian dollar. Speech by Stephen Pelosi, the governor of the Bank of Canada, following yesterday's no change decision at 9:15 GMT. Some figures from New Zealand, the Business NZ PMI for those who are trading at night. The kiwi, no expectations here. It was at a strong 57.9. And yeah, and overnight, some not so important figures from China, the money supply and new loans. Well, let me take back my words. It can turn into an important event, especially the new loans, because they jumped a lot last time, so they should fall this time. They jumped 2.5 billion. You see this big jump here was related to the new year, so we're expecting it to fall back to the previous range. This could impact the mood tomorrow, but I'm not sure, depending on the outcome. And yeah, another thing we already had today is the current account trade balance from Germany, a bit under expectations, but still a big surplus and doesn't have a big impact. And I see some nice good news here from Spain that retail sales advanced more than expected. It absolutely has no impact today, at least, on euro dollar, because on the euro in general, because it's Draghi day. Okay. Euro dollar is very much in the same place, 109.70, 109.60 to 110.70 is the current range. 109, 108.20 is below. See more comments here. Okay, we're chatting with each other regarding the Australian US and the aquarium all the time. Pairs to watch beside euro dollar. What else is there today apart from euro dollar? I would say all the other euro crosses, because it's all about the euro today. Perhaps euro yen, which I mentioned in the context of the question before we heard about the yen. That's because euro yen, let me show the chart. If we have a lot of things going on, no cheating, yeah, okay, don't worry, I'll talk about another currency pair soon, but if we have a lot from the ECB, and I hope they will surprise, then we'll have the euro collapse. No, it's, well, maybe it's not so. And the yen also collapsed. Okay, so perhaps it's not the best pair. Let me not cheat, get back to something else. Apart from euro dollar, or the euro in general across the board. Maybe the Canadian dollar because of testimony of close and the no change yesterday, but I don't expect. Of course, always the Canadian dollar is sensitive to oil, but yesterday we had all the big news. So let's see also how the kiwi continues. Now it's recovering just a bit. Perhaps, okay, this is cheating as well, but also look at the Swiss franc. If we have the ECB doing a lot, we might have the Swiss National Bank intervene, okay? Intervene to weaken the Swiss franc, do this bigger than neighbor currency war, race to the bottom thing and try to weaken the franc. And if they try to weaken the franc, this could support the euro, well, just a bit. So if we have a real collapse in euro dollar, that means we'll also have a collapse in euro franc. We might see Swiss National Bank intervene to weaken the franc, and this could have an indirect impact, of course, on dollar Swiss as well, which is very much in range. Okay, so we could have dollar Swiss rising. So far, euro Swiss isn't a big mover, but it could move. I'm sure it'll move on the ECB, whatever Draghi does, but we might have this, the reaction sort of countered. If it's a big move by the ECB, the action could be countered by the Swiss National Bank. Okay. Do you think the kiwi will be under pressure, or will it recover fast? No, it will not recover fast. I don't think so. Well, I never know, of course, but it was a big surprise. We are seeing it recover. I don't see it challenging 68.20 very soon. Of course, if we have a lot from Draghi and good mood in markets, we'll have the kiwi also recover, but I still see it as the weakest link. Still hurt from the rate cut, and with more cuts expected, I'll be surprised if it challenges 68.20 once again. I see more pressure to the downside. Okay, that's my bias on the kiwi. Please summarize Draghi and euro again. Came in late. I'll do that in the wrap up. Sure. You think a rate cut is going to happen? Certainly. At least 10 basis points. It could be 10, 20, or 30 basis points, and it could be a tiered system, but we're going to have something for sure. Okay, talking about the tweets. Kiwi, please. Yeah, I just talked about the kiwi. Of course, the rate cut. It found a low level at 66.20, around 150 pips reaction on the surprising rate cut. Resistance remains 67, 68.20. Perhaps we can erase this line. And to the downside, we have 65.50. How is the ECB buying bonds? Crowd out investors from these bonds? Well, if they buy the bonds from the investors, these investors have more money. Eventually, the ECB sits on all the bonds, not all, but many bonds, and the market becomes quiet. Okay, because the ECB is not selling, finished buying what it needs to buy. There aren't too many bonds to buy, so it crowds out investors. This money goes into European stocks. Money goes into outside the Eurozone, weakening the euro, and money in theory should go to the real economy. Okay, but sometimes they just continue buying these bonds, and that's why the yields are so low, extremely low. JCB rate, ECB, I guess you mean, actually bid the yen. What will happen to euro? I'm not sure I understand the question, but if the ECB does a lot, money will go elsewhere, including the yen, and the euro will fall, of course. Okay. So all the boats will rise if the ECB will do a lot. But perhaps we'll have some kind of action from the Swiss National Bank on that front. So beware. Okay, we're currently seeing euro dollar quite stable. Euro pound, okay. Euro pound very, very stable. Okay, sliding a bit in range, but all in all, in the past few days, it went off the highs because the pound managed to recover and the euro, well, mostly due to the recovery of the pound. Now it's waiting in line for the ECB. Next move depends fully on the ECB. Okay. 77 might work as weak support, but I see it more 76.60 followed by 75.80 and 75 to the top side. We have 75.80 and 79.30. If Draghi does a lot, then the pair will collapse, and if Draghi disappoints like in December, the pair will leap. Okay, see a comment between you guys. Okay, so it's time for the wrap-up for today. The wrap-up will include what happened and the summary of the ECB preview. Sorry, my voice isn't at its best this morning. So this is the wrap-up for the live market open for March 10th. It's Draghi Day, it's Thursday. It's an important day in markets. But before we talk about the ECB, let's talk about what other things better mood in markets because of higher oil prices. Crude oil inventories came out as expected, but we've seen a drawdown in gasoline and distillates, and that supports oil prices, shows better global demand, and lifts markets. And comes after a few days of a bad mood because of China. But from China today, we had higher inflation, which is also good news. Still a growth there, nice picture, stronger stocks, and everything's okay. And of course, tension towards Draghi. Yesterday we had two rate decisions, and they both caused movements in markets. The Bank of Canada didn't do anything, but they were less dovish than expected. The Canadian dollar strengthened. Of course, it got some help from oil prices. The Bank of Canada is basically waiting for the government for its next move. In New Zealand, we had a surprise rate cut from 2.50 to 2.25. Big news, hit the kiwi quite hard. More cuts are expected in the next quarter, so the kiwi is certainly under pressure. Today's scheduled, our broadcast begins at 12:30. You'll see it on FX Street. At 1:45 GMT, 1:45 here in the old continent, the ECB's rate decision about the rates themselves, and they'll also add a statement that more will be announced at the press conference. Remember, we will know only about the rates, but not about the tiered system. More about that soon. And Draghi's press conference begins at 1:30 GMT. It usually lasts a full hour until 2:30 GMT, until around 3:30 here in the old continent. Okay, so ECB, let's break it down. Expected to cut the deposit rate, which is negative, from minus 30 basis points to at least minus 40 basis points. If we don't have a rate cut, that will be a shock. That will be euro positive, a big disappointment. Many expected also to be cut all the way to minus 50 basis points, and some even minus 60, which is the extreme case. However, if they do it in a tiered system, that means the lower negative deposit rate applies only to some kind of assets or a certain level of deposits. We could have some of the sting coming out because there will not be a full negative deposit rate cut. So we should watch out for that, and we'll learn it only at the press conference. Okay, so be careful on the initial moves on the cut. Of course, if it's a big cut or no cut at all, if it's a big surprise in any case, it's significant. I mean, if it remains 0.30 or cut all, that'll be, of course, euro positive. And if it's all the way to minus 60, it's euro negative. But if it's somewhere in the middle, we'll have to wait for more details. The second big thing is the size of the QE program, which will be announced only at the press conference. Currently 60 billion. The program is already running for 1 year with success. Some expected to remain unchanged, but the median is more around 70 to 75 billion. That means a significant increase. Some expect even 90 billion. Remember, the ECB has a limited number of assets it can buy. We might have them announce that they'll buy different kinds of assets like corporate bonds or things like that. And perhaps more importantly, they currently have a limit to government bonds. They don't buy bonds that yield under the negative deposit rate. They can scrap this rule. They can say, we're buying everything. So if a short-term German Bund has a negative yield of, I don't know, minus 1%, it could become eligible for buying even if the negative deposit rate doesn't fall that low. Okay, very much a race to the bottom. That will be more significant. Other things to watch out for, the more complicated things, we mentioned some of them. The assets, what the instruments, the financial stuff that ECB buys, tiered negative deposit rate could take this thing out of the cut. The next moves by the ECB, is it done for the foreseeable future, or will it introduce more moves perhaps in June or September, or next meeting already in April? We'll have the first forecasts for 2018. And one wild card, nuclear option, is that they'll buy non-performing loans of banks, what's called bad bank or bad assets, which will be going into negative territory. But this could free banks which are stuck with loans that everybody knows will not be paid, but they're not admitting it, and they're not lending to the real economy. That will free money, but will put the ECB in risk buying basically garbage. Okay, another thing to watch out for, forgot to mention before, regarding QE. Currently, the program after the recent extension runs until March 2017. That means a year from now they could extend it to late in 2017, 2018, or say we have no limits. That will also be impactful, but anyway, they always said that they could extend it anyway, so it's not such a big deal. In the last meeting, they announced that they'll reinvest proceeds. We'll hear Draghi repeat that, of course. And I guess that's it for the ECB. To summarize, first event is the negative deposit rate. Let's see how much it's cut. We'll have to watch out for the tiered system. Then at the press conference, we'll hear about QE. We'll hear about if it's expanded, what they're going to buy, and where's the yield limit. And watch out for the assessment about the economy in general. How bad are the inflation forecasts? We'll have the first forecast for 2018 about growth, about governments needing to do more and things like that. Anyway, first impact, the numbers, then the details. The devil could be in the details. I'll just remind everybody that we have the ECB needs to surprise markets. Okay, ECB needs to show that it's powerful. Draghi was a master back in January 2015, 14 months ago. He then announced QE, and he created expectations, leaks to the press, that it'll be this level, and then it came out much higher. Instead of 50 billion per month, they announced 60. Instead of program worth at the time around $500 million, it came out $500 billion, it came out over 1 trillion. That was a masterpiece. Back in December, if I'll show you the charts, he also created high expectations, and it just wasn't enough. This is the big jump here. Ran away. Okay. 460 pips in one day. He did deliver a cut in the negative deposit rate from -20 to -30 basis points. He did announce reinvesting in proceeds, but that wasn't enough because markets had expected more QE. Maybe we'll get that now. Okay, so that's the big event for today. Remember that we could have, if we have a huge announcement, we could have the Swiss National Bank intervening. Other than that, yeah, that's it. Before we go, I see here a chart for me. Oh, very nice stuff. Bon Vigilantes, yeah, I like their website. I follow it every day. I mean, I follow it on my RSS feed. So let's share this with everybody on the screen as well. Okay, it's a bit blurry, but Oh, that's a better look at this. Yeah, the various banks. So negative deposit rate cut, I see most of them are talking about 10 basis points minimum, only RBS in this chart. 20, I've also heard 30. QA expansion in size, nothing. 15 billion, 20, 10, 20. Yeah, that's what we're talking about. Yeah, QA expansion and timing. Most of them, it matters less this time. Only one bank, Goldman Sachs, expecting 6 more months. More LTROs. I didn't mention that because it's not that important. Remove deposit rate floor. Okay, this is something I mentioned, the no yield limit. So we have 1, 2, 3 out of 7 banks mentioned here that say yes, the others say no, so it's mostly mixed. Other additional levers, buying semi-public entities, multi-tiered system, capital key, political issues. Yeah. Anyway, thank you very much. In general, we're talking about a cut in the deposit rate, more QE, but the details do matter. Okay, so join the broadcast at 1:30 GMT. Sorry, 12:30. Sorry, 12:30, 1:30 here in Europe, Central European time. And tomorrow we're not going to have the show as usual, but you will see a recording. We'll have an analysis of the ECB. In any case, today's ECB, of course, is a huge event, the biggest event of the week. Will have an impact, I believe, until the end of the month. I hope I'm not overhyping it and that it won't be a big disappointment, but I'm optimistic that the Draghi show will be great as usual. So thank you very much, everybody, for coming. Remember to wait for the news before really acting. I believe we'll have a very exciting day today. And that's it for today. So wish everybody success and see you, and bye-bye.